Never before has the country faced the collapse of 7 financial institutions in under 3 years, 2 of them this year alone. One might expect this to trigger a financial stability crisis for the country, but the regulator's strong action came to the rescue. Dewan Housing Finance Limited became the first ever financial services firm to be resolved under India's 5-year-old bankruptcy law, setting the precedent for resolution of other stressed financial companies.
The successful resolution of DHFL has created a nice template that you're seeing already being replicated by many other institutions as they go through the bankruptcy process.
Soon after Piramal Group announced the closure of the DHFL deal, Reserve Bank of India moved to supersede the board of 2 SREI Group companies and appoint an administrator in early October. SREI Equipment Finance and SREI Infrastructure Finance together have a debt of over 32,000 crores and had defaulted on more than 14,000 crores of those loans when RBI took action against them for non-repayment of dues and governance concerns. Both the firms are currently undergoing insolvency proceedings under the NCLT. While banks were able to recover almost 46% of their dues with the resolution of DHFL, they're hopeful SREI could also fetch a decent value.
There is some precedent now. We have the example of DHFL, and RBI referred it to the IBC. And here we do know that, for example, the equipment piece is better than the infra piece. So obviously there could be some juice in the assets.
With SREI, RBI's move was largely anticipated. There were signs of trouble brewing and murmurs on the street about RBI taking action. But no one expected RBI's takeover of Reliance Capital next, barely 2 months after SREI was superseded. On November 29th, RBI said it took action against Reliance Capital in view of defaults and serious governance concerns. As per its FY21 annual report, Reliance Capital had already defaulted on repayment of loans totaling over 20,000 crores, and its total financial liabilities stood at over 20,800 odd crores. While SREI and Reliance Capital face a long road ahead before resolution, there is light at the end of the tunnel for depositors of PMC Bank. 2 years after the cooperative bank was placed under restrictions following the unearthing of a fraud, RBI has proposed a draft scheme for its amalgamation with Unity Small Finance Bank, a joint venture between Centrum Finance and Bharat Pay. While depositors with up to 5 lakhs in deposits are assured to get their money immediately, those with higher deposits will get their money back over a period of 3 to 10 years. The final scheme is still awaited.
As per law, the final scheme as finalized by us, depending on the inputs, we will examine them. Based on the comments we receive, we will examine them and we will finalize the scheme. And then we will have to, as per law, we have to send it to the government for approval. So we propose to do it very quickly.
Though the Rescue Act reveals the regulator's proactive hand, the criticism, however, is that perhaps RBI waited a tad too long before stepping in. Going ahead, resolutions of both SREI and Reliance Capital are going to be very keenly watched to ascertain if DHFL was not an exception and if the IBC can serve as a good tool for recovery of distressed non-bank lenders. 2021 is going to go down as the year that saw the cleanup of the last set of legacy distressed financial assets, and now, with a prompt corrective action framework for NBFCs in place, one hopes that large dissolutions like INFS and SREI can be averted in time. In Mumbai, Ritu Singh.